Least. And as we're going into the day here, it's important to remember that this was being priced in as we are going into. It's really been being priced in for the last 2 weeks. So when we're looking at the dollar and we're looking at the dollar's strength trade, we've completed all of the targets that we had been inside of, pullbacks inside of. In fact, you can see here DXY is running directly into the profit target of our last daily long setup. And we're just trailing the next setup in our series. But we're kind of at the end of a rope here. And while everyone right now is kind of panicking at a low, the reality is that it's the dollar strength trade has completed its target, and so there's room for when we're thinking about the dollar historically is technically inverse over the longer periods. Now, right now it is in neutral, but will a dollar strength trade affect the indices? Absolutely, to the downside. What happens if the dollar pulls back off this target? Well, the currencies are going to rally. So that gives them the tailwind. The indices normally would have a rally in that type of event. So that's important to note. Bank is also completing a profit target. We've essentially run into all of the targets that we were inside of setups inside of last week. So we are sitting down here at a profit target inside of bank. Now we're going to have a gap down. It's going to be interesting to see if we have an extension that develops here, but we're kind of at the end of a rope here in relation to the VIX. The VIX squeezed up into profit targets and then right back up into our new highs of a new high of the year. And one of the really interesting things that has happened here with the VIX as we went into our morning time frame is that we had this Asian session high and the VIX squeezed up into it. And while the indices made new lows, the VIX didn't make a new high. And so there was a divergence that was created. And so that low that we had during the overnight time frame on the indices was a massive bear trap when we're looking at it from the perspective of the indices, at least, and that's in the smaller time frames. The smaller time frames. And so we have this potential for a bounce on the indices into resistance and a pullback into support on the VIX. Now, it's incredibly important to understand that the VIX is still in an uptrend above the 2055. So if we're thinking about this, the VIX has a short-term pullback in the process of a longer-term rally. And so what that would look like on the indices is that we would have a short-term bounce into a continuation of a weakness event. And so we're watching here in relation to the VIX's 2228, rounding up to 30, adding a tick. That 2235 holding below the 2235 represents where the counter trend on the indices could still rally up into resistance as the VIX is falling away from or falling back down into its support. You can see the inverse of the little short from highs that we have on the VIX here in our longer term uptrend. We have a little smaller trend, uptrend up into our larger resistance. Now note that we're going to have a pro gap down and go situation. We're not anticipating a gap fill today because we're more than 30 handles away from the previous day's 4 o'clock close. But could we squeeze into? I want to point out here as well, what are these dotted lines here? This stream continues at eMiniAddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.